Good morning, everybody. Thanks very much for joining us. My name's Richard Betts. Welcome to this Logistic investment briefing. We're going to be looking at e-commerce, but also supply chains, locations, and particularly looking at how COVID-19 and the health crisis has maybe changed some of those things, and drilling down a little bit more, following on from our earlier investment briefing, looking at locations a few weeks ago. In case you don't know us, we're Real Asset Media. We run a series of events, magazines, TV interviews. We also run and are launching a senior housing and healthcare association later on this week. Real Asset Insight is a sort of quarterly magazine. Living Retail is twice yearly. And what we focus on is really, I suppose, sharing insights, sharing research, sharing strategy. And especially during the times of the sort of health crisis, we've been very keen to introduce new initiatives to help keep you connected. Previously, we were running 60+ events across Europe and in Asia and in the US, and we've obviously moved all of those onto online, so that irrespective of where you are geographically, both speakers and attendees can all join and share your views. We've introduced Realcast, which is a kind of weekly view on the week, catching up on some of the key headlines, and we'll also pick up some of the topics from this session in the one next week, so do look at that. And we're also working on special reports. We've released one that's free to download called Coronavirus Impact on Real Estate, and we'll be doing another one in the next month, which is looking at I suppose how markets have adjusted and how we're rebuilding some of the real estate markets going forward under this kind of new normal. There'll also be a new initiative coming up, which we'll announce later on this week. So you've got a special preview of it, which is called RealX, which is going to be a global conference and exhibition, a new kind of event. First one is on the 17th and 18th of September. And there what we'll be doing is creating a virtual exhibition, but also a conference program for that period, and then it runs for 365 days a year. And so a number of these events will then be held in that auditorium, which just helps build some more connections and use some of that networking. Super panel for you today, and I just want to introduce everybody, but maybe let's just allow yourselves to introduce one another. Thanks very much. Jean-Luc.
Hi, Richard. Hello. So I'm the Chief Development Officer for P3. P3 Logistic Park is a long-term owner and developer of warehouses in Europe. We have 5.7 million square meters. As Chief Development Officer, basically I'm overlooking the development activities in certain countries, plus I'm also Managing Director for Italy.
Super, thanks very much. Ben.
Hi, my name is Ben Segelman. I'm Head of Capital Markets for UK and MLEMEA at DHL Supply Chain. DHL Supply Chain being the world's largest logistics provider.
Super, thanks very much. Raimund, and a special thanks to you, Raimund, for joining us on holiday.
You're welcome. It's exciting to see you all. So my name is Raimund. I'm since 20 years on the occupier side, cutting edge technology. So I consider myself as a digital native. The last 3 years I'm with Zalando, the biggest or largest pure fashion online player in Europe.
Super, thanks very much. Logan.
Hi, and firstly, thank you, Richard, for organizing this and having us all here. My name is Logan Smith. I'm with Aevitas Property Partners, who is a real estate investor and manager. And also, for context, I would point out this week's issue of The Economist, for anyone who might not have seen it, where our little sector is highlighted fairly in a fairly large way, specifically Prologis and Blackstone, in fact, but mainly Prologis. And I think that that the level of visibility that this is giving us right now is really quite positive, and you can't help but to be a little bit proud reading it. And it really sets the tone for what we're seeing and a lot of what we'll talk about today.
I mean, it's definitely really interesting how the how this sector has especially been highlighted. And actually, later on this week, on the 4th, we're going to be looking at senior housing and healthcare real estate, which I think is another sector that's been really highlighted by this crisis. And last but not least, Anita.
Hi, yes, thanks, Richard. Nice to see everyone and delighted to be here. I head up logistics and industrial for BNP Paribas Real Estate. We are one of Europe's largest consultancies for logistics and industrial, advising occupiers, investors, and developers. And we operate in 27 countries in Europe under BNP brand and together with our exclusive alliances. If we go to the first slide, we're really looking at the economic outlook, and I think we need to recognize that it is an unprecedented situation. You know, in the top part of this slide, you can see the GDP, world GDP for the last 50 years. We can really see that this year it's quite a significant impact, and it's not a one country or one area. I think it's a general global thing. And this particular information actually comes from our parent company, BNP Paribas, and they are forecasting that for this year there'll be a global contraction of about 2.5% in GDP. So we can also see in the bottom slide, for example, China as well, decreasing, still above a 0, but closer to a 0 than a 10 before. What it means for real estate and logistics, well, I think we all know that logistics has been the most resilient. And we look at the next slide. We're starting with the occupational fundamentals and really the take-up. And in Q1, we don't really see the effect yet, although the lockdown started in March. But we see the take-up's generally been stable in the largest markets. So Germany, by far the biggest market, it's been stable. France stands out as the market where really take-up dropped off, but that was also a pre-COVID thing rather than a COVID. And in terms of demand, it's clearly, I mean, we can say e-commerce has been by far the biggest winner. It's something that's quite widely known, but also essential goods, you know, like food, pharma. And online is something that we need to not underestimate. And next slide is something that I think we all know and we have seen many, many times, but I think it's good to just remember that in the European Union, only 63% of the population buy goods and services online. So the potential is significant. And if we, for example, look at Italy, which is one of Europe's largest economy, and it's the second on the right, only 38% of the people buy online. So 62% of the population doesn't buy online at all, whether it's a good or a service like flight. So the potential is really good. And what we see through the COVID is clearly it's a habit that we're learning very quickly, and it's a habit that's very hard to unlearn. So there's quite a lot of potential coming from there into the logistics demand. Now, what has it been doing to the rents? On the next slide, we can see that the impact we don't really see yet, but we can see that overall the rental growth year on year has been about 3.9%. These are the prime rents for logistics that we currently have. So it's logistics, 5,000 square meter plus units. And we can see that the rents have been edging up, and that's really for two reasons. Land supply, there really is a genuine issue with land supply, but also supply of speculative developments. And now through COVID, those have been virtually shelved. What has it meant for the investment market? And on the next slide, we can put logistics a bit into the context, again, looking at Q1. Yeah, the figures are looking good because the lockdown's not really coming into effect here. But the interesting part is that logistics, the lowest one, the light blue, is quite stable at 41, but it's coming very, very near to retail. In terms of logistics itself, if we're looking at the next slide, I think we need to appreciate that Q1, despite lockdowns coming into effect in March, Q1 was the best Q1 ever in terms of transactional volume, and that's on the back of Q4, which was the best Q ever, very clearly. So there's a significant weight of demand for the sector with the capital allocated to it, and it's more an issue of supply, and it's something that we still see in this particular time. It's the supply, and if you put the uncertainties aside, particularly also like debt terms, there's still more parties looking to buy rather than parties looking to sell. So the question is really where the capital is going. And in the next slide, we can see the transactional volume per country. And we can really see the three big markets, UK, Germany, and France. France is abnormally high. Its Q4 was an exceptional Q4 last year for France, but normally France is about half of that volume. But there's a good transactional volume across all of the markets, really, and we can see that it's a very good spread also from a cross-border interest, cross-border investor interest in Europe. In terms of prime yields, in the next slide, it's a very good question. Again, this is Q1. In Q1, clearly, we don't really see an impact. The yields are compressing. So we need to note the more expensive debt and less available debt. But I think we have now come to the point that we have a number of reference points in Europe where we are seeing yields reached for core assets at pre-COVID or better than pre-COVID, right? So I think on a core end, we can be fairly certain on a price discovery. I think on a core plus and value add, we still need to go through that a bit more to have that. But in terms of the potential for it, if we look at the next slide, what we really like to see is compare logistics with offices. And structurally, there's always been a spread. And at the moment, the average of the spread between office and logistics is about 130 pips in Europe. And where the spread is lower, for example, UK, that's really because of the issues in the office sector rather than the logistics. But this is where we see the potential because, you know, if we put retail and hospitality aside, there are clearly some question marks on the underlying fundamentals in offices, and those question marks don't really come into play for logistics or industrial, for both logistics and industrial. So there's a lot of potential still for logistics to, you know, stay firm. Particularly with you know, with the demand from investors coming through. So that's a very quick overview where we are, and really from a Q1 point of view. So yeah, we're looking forward to continuing on the discussion of what we see.
Great, thanks very much. Maybe why don't we start with you, Jean-Luc? Just because also we're wanting to look at e-commerce especially, and also some of the supply chain side of this, and how that plays into investment. What's your sense just in terms of some of the changes that I suppose you've seen or you expect to see coming out of this health crisis, whether it's acting as an accelerator, or what's your sense of that?
Yeah, so I think that the interesting thing is that out of this crisis, there will be winners and losers. We see that, for instance, in the last 3 months, we had about 14 retail chains which required code protection, and many others which closed hundreds of stores across the countries where they are operating. So retail is definitely suffering from this crisis, and actually there was even a study, so it was maybe just an acceleration, this COVID-19 issue, a study from Credit Suisse in 2017 saying that 20-25% of the shopping malls would be closing going by 2022. So, I mean, this COVID-19 put a lot of pressures on retail. On the other hand, you see Amazon, which did on Q1 2020 an increase of 26% of the sales quarterly year on year. And you can see in general, even for instance for Italy, where we had a peak of 300% more sales on internet due to the COVID-19. So I mean, this is an example of winners and losers. So as Anita said, e-commerce will definitely benefit from this, not only this one. And so this is, let's say, just in general, the fact that that we see. So Amazon moving from a something store to an everything store. Now, if you think about a little bit more in terms of forecast, we think that 2020 will be the tipping point for e-commerce. So it will reach more than 16% of the total retail sales worldwide. So it will reach about $4,200 trillion out of the $26,000 trillion of the retail sales worldwide. So the e-commerce is moving from, let's say, kind of a niche market to now mainstream. This is something that will happen in 2020. And COVID-19 has been accelerating again this trend, because we think that COVID-19 has basically shaved about 5 years of, let's say, e-commerce growth. It has accelerated internet adoption, people working from home, people shopping online to get the things they need to stay at home. And of course, this will all transform the logistic market. So e-commerce will be definitely gaining from this. On the other hand, and if I finish on this one, I think that we will still see for 2020, as Anita pointed out, the GDP will go down, and this is generally one of the closest correlator of demand for warehouse space. So there is a consulting firm called Brooke Consultant International, which planned that there will be a 32 to 46% decrease of the take-up in 2020. So this will be also shaping, let's say, the demand in 2020. But going forward, of course, e-commerce will be gaining a lot from this crisis.
Okay, good. Thanks, Jean-Luc. Ben, I just wanted to pick up with you. In terms of the supply chains, what are we seeing there? I mean, we've seen a lot of stress put under supply chains, certainly initially in some parts of Europe anyway. But I suppose, how are you seeing that? Are you seeing a substantial change likely? What's your sense of that?
E-commerce has made the supply chain more critical than ever, and that in itself has also produced a number of opportunities as well as a number of challenges. I mean, from an opportunity perspective, it's moved up the hierarchy of how businesses prioritize their e-commerce offerings to the public and to businesses. And it's also become a crucial component of the consumer sort of customer experience. That's something I'm sure Raimund can talk to a lot more than me, but really it's now become sort of mastering e-commerce logistics as a priority across the sort of business sphere. But with that, as I mentioned, there's come a lot of challenges. Retailers are having to look at new types of technology to find solutions, but they've also got to look at realigning their broader sort of business models. One of the aspects which I'm sure we'll talk about in this is about how retailers and logistics providers such as DHL are looking at their bricks and mortar offering. Everybody talks about the last mile and how important it is to be within reach of your customers, but it's also become a lot harder to do that in urban locations where urbanization has increased to such a level that we are facing issues such as congestion, levies on transportation coming into cities, all of which is increasing costs. And I think that is all having an impact, especially as the consumer is expecting shorter and shorter delivery times. It was a while back accepted that it was a sort of 2-day turnaround, then 24 hours, then 6 hours, and now 2-hour delivery process. So, there's a lot of thought that has to go into how we manage this efficiently, whilst also thinking about how we, work more efficiently from a sort of carbon offsetting and technology perspective. Because all of these sort of issues I mentioned need to be sort of overcome in a way that also, thinks about future growth. At the moment, this is quite a small market comparatively, representing still probably only about 30% of total retail sales. But this is going to grow. E-commerce is going to grow. COVID has shown us that people will rely more and more upon e-commerce as a means of having the goods and services that they need.
Logan, let me just pick up with you. What's your sense of some of these changes, and also pick up on any of the points that anybody else has raised?
I think it's a great start to what we're talking about. I hear Jean-Luc talking about the strength of e-commerce and how it's expected to continue to grow, and Ben starting to get into what some of DHL's challenges are with regard to last mile. And I think commerce really is obviously the driver behind a lot of this. And the other one is onshoring and the level of inventory increase that is expected to accompany. And clearly these two trends are huge. Clearly these two things have caught a lot of people by surprise. They were on the way before COVID. COVID accelerated them. And now we're dealing with the consequences. And one thing that really struck me was looking through some of the research that's been published in the sector over the last month is just how unanimous the view seems to be that over this initial potential drop in absorption or demand, how high the expectations of growth are. Prologis, for example, put out a study that projects an additional 150 million to 200 million square feet per year of additional absorption in the US. And this may seem like a bit of an outlier, but Colliers has a number of about 300 million square feet per year of additional growth, right? In addition to, which is about double what they projected originally. And CB and Jones Lang have similar numbers. And while they're positive, while I think we all agree that the sector remains incredibly strong, that we'll see a lot of it, from what I've heard so far, we've touched on some of the things I think that concerns me a little bit about that. When we think about cannibalization, for example, and obviously all of this is dependent on e-commerce, which, as we've talked, is, and the numbers I had heard, Jean-Luc, was that total percentage of sales is around 11%, up from a base of maybe 7 to 9% a couple of years ago. And because of COVID, that 11 to 12% is going to jump up to about 20%, which is great. And we expect that, and we know that'll lead to additional demand. But McKinsey put out a study last week that said, hey, completely unrelated to real estate, right? They said, look, if we get to this level of demand, the average operating margin for retailers in the US, which is currently around 5%, will drop to close to 1% or zero, which, again, not new, nothing that we weren't dealing with before COVID, but it forces the question about who is going to be taking all of this additional warehouse space. And it's the same, I think, with the inventory increase as well. We expect this huge wave of onshoring, this huge wave of buffer stocks, additional supply as supplier bases diversify, et cetera, for sure it will happen. You know, and Raymond and Ben, I'd be interested to get your take on this as well. But when I look at the experience of Amazon, of the grocery retailers over the past 2 months, every day for them was a Black Friday. Every day for them was 2 days prior to Christmas, right? To the extent that there were stockouts, it wasn't due to a lack of warehouse space. It was due to labor availability. It was due to inventory visibility. It was due to something related to fulfillment or supply chain. So, and I think if we talk about having, in the projections that I've heard are that in order to get to this higher level of demand that everyone expects, the projection is an additional 5 to 15% of inventory will be required throughout the economy. And I think the problem is that these assumptions, they're not wrong directionally, but they're fundamentally backward looking. They're making the assumption that all the warehousing we're going to do in the future looks a lot like all the warehousing that we did 2 to 3 years ago. And I think that's a mistake. And especially when you look at this sector, we have not been all that good at predicting customer demand in advance. I think back to 2008 and the global financial crisis. You remember, I mean, there were vacant warehouses in the UK and Poland scattered around. The sky was falling. A lot of us, and probably some of us on this call, thought that they would never lease. And sure enough, 3 years later, everything was occupied. Our asset managers had all done a fantastic job. But I think the reality of it was that we didn't understand. We thought we understood, but we didn't really understand the potential longer term impact of e-commerce. And we made a mistake of thinking that the next 3 years would look a lot like the previous 3 years. So here we are in a fantastic point in the sector when clearly there's going to be new demand coming from a lot of directions and opportunity in a lot of areas. I do think it's also important that we not make the same mistake that we made in 2008.
I mean, interesting. Thanks very much, Logan. I'm just going to share the results of the poll. Reminder, it was the health crisis has accelerated e-commerce penetration across Europe. Will this remain post-COVID-19? Yes, the level will stay high and grow further, is 53%. Yes, levels will drop back but remain higher, 46%. And no, the market will return to pre-crisis levels and trajectory. I don't know why I put trajectory in, which I find quite difficult to say for some reason, is 1%. so that backs up a number of the things that I think people have been talking about there. Maybe Raimund, let's just pick up with you, I suppose, how Zalando have I suppose what's the impact been on Zalando, and how do you see that sort of short term, medium term, and then moving into the long term trends which Logan picked up?
Talking about this, maybe just some general statements. So sometimes I think we are too fast to draw the final conclusions. So you read everywhere, we have gone through a black swan event, a major unprecedented crisis, and everyone knows already what the outcome will be. So I think there will be changes, but maybe a little bit same, but different. So I'm not so convinced, depending how long this takes, whether there's a fundamental change in many of the things. It is, for me, COVID was a kind of an accelerator, or I would rather call it a contrast agent. So it puts the contrast agents actually in your veins, and you can see now how the supply chains work. You see actually structural problems with traditional retailers. And that's a little bit more. Anita has put it this way, for me, it's not about winners or losers. It's maybe some companies are more resilient and prepared for the business model. I've also seen on LinkedIn one thing, what I really like, what is driving your digital strategy? Is it your CTO or is it COVID? And I think probably that's the point. So COVID has shown that digitalization is really necessary. So, and then coming back to Zalando, so we have to say, we had 2 months, we were hit and we were a little bit afraid because this was when the lockdown in Italy happened. And I think Europe was a little bit under shock. And of course, we are not in the grocery shopping. And maybe for 2 weeks, fashion was not the first thing people were thinking about. But after this, it is amazing. We're also going kind of Black Friday, Christmas events. So it really accelerated. And as Logan actually said, part of the problem is really the supply chains, because we're going, and that's when you talk to people from the DHL last mile or DPD or whomever you talk to, they're telling you for us it's Christmas since 2 months, so they can actually not deal with all this stuff going through the system. So we fortunately have done very well, but we have also done some measures as a platform. For example, we integrated a lot of physical retail stores. That's the program Connected Retail. That was very successful. That's actually an opportunity for shops in Berlin, for example. When you're a local shop and you cannot sell, you can actually put the stuff on our website and you could sell it and ship it directly from the store. What I think helped a lot of healthy businesses to survive. So overall, we really see a change or a shift or acceleration to e-commerce. And I would also say it's probably going on. It's maybe there will be a drop because as soon as you can go shopping, some people are maybe happy to see people again and go to a shopping mall. But I think it has definitely just accelerated what has been a trend before.
No, that's interesting. I heard a very nice phrase for that, which was called revenge shopping.
Yeah, revenge shopping. Yeah.
Which is good. I'm just going to pick up some of the questions that are coming in on both the chat and the Q&A buttons here. This one's for you, Jean-Luc, which is how much of your logistics space is used by e-commerce activity and how much from bricks and mortar activity? Do you have a breakdown? Thanks. If you don't, Jean-Luc, you can say I don't. But do you have a sense of that?
I mean, we're looking very closely our activity, our portfolio on the e-commerce part, and in the last 24 months, our portfolio increased, I think, from 12% to 18% roughly. Okay, in terms of total, let's say, share of e-commerce. On brick and mortars, I will need to double check. I'm not sure on top of my head.
Okay, great. There's also a couple of other ones which fit around this, but there's one specifically for you, Anita, which is how much is the expected yield contraction for Dutch and German markets by the end of 2020, considering today Prime sits at 4.4% and 3.7% respectively. You can also elect to come back to that via text if you wish, but if you've got that to hand, then do share that.
That is a very, very good question, and it's actually something we don't forecast, and now it's quite tough, to be honest. But I think Germany is by far the most attractive market. It attracts very, very a wide range of capital globally, cross-border capital into Germany. It's the first market, and Netherlands it's the second. So I think those two markets I expect will do probably the best. I think setting UK aside because it's also pounds, but without going into forecasts, it's really hard to say. And officially, we actually don't have it.
Okay, good. I'm just going to, because we talked a little bit about supply chains, I'd just like to get everybody's view on this as well. Do you expect to move, a move towards onshoring in terms of supply chains post-COVID? Because I think that's quite an interesting topic just in terms of what that means for the industry, but also the real estate side on that. Whilst everybody's answering that, let's just pick up on another topic which I think is interesting. And thanks very much. This is from Alexander Fishbaum. Thanks, Alexander. Thank you for joining us this morning. Always a pleasure to see you here. And it's an interesting point that's come up quite a lot, which is that, of course, we've seen this big rise in e-commerce, but at the same time, we're looking at the retail sector being in quite considerable stress. And so if retailers go bust, will they not only vacate shops, but also warehouses? Can these warehouses be used for e-commerce, or are they too different? And how much of them are needed? So it's that picking up on the point of, I suppose, how much of the impact is going to be felt by the recession and retailers going bust versus the rise of e-commerce. I don't know if anybody wants to pick that up. Jean-Luc, maybe?
Well, what we see, for instance, I'll give you an example. In Italy, Auchan, the French retailer, was bought by Conad, which is Italian retailers, and you can think about a potential consolidation of the operation. So there will be definitely, I think, if retail sales will go down, the space will go empty, and then someone will need to fill it. Now, will e-commerce be able to fill this space? I think it will be very much depending on let's say, how e-commerce operates. So there are the long-term strategic places where e-commerce wants to be. So big fulfillment center with a lot of automation and the whole supply chain until last mile. And there will be kind of pop-up. Pop-up meaning it's Christmas, I have an overstock, it's Black Friday, so what do I do? Where do I put these things? And I think that this space will be potentially filled in by or e-commerce or eventually by other stuff. Imagine if we talk about onshoring, for instance, or increased inventory level, there will be a moment where this needs to be somewhere, and the empty space by eventually retailers will be filled by this additional demand.
Okay, good, interesting. And just picking up from you, Logan. What's your sense of that in terms of whether or not there will be more overall new space created, or whether or not we're actually moving around the overall space that is available, and it's becoming more focused on e-commerce than perhaps, so it's moved towards B2C rather than B2B.
I do think that there will be more overall space needed on an absolute level, to be very clear. To the last question about retail, generally if a retailer goes bankrupt, they stay in business firstly for a while before the stores shutter, and even after that, usually the better performing stores remain open and the weaker ones shutter. The percentage of warehouse costs relative to total real estate costs is usually pretty small, which is why warehouses remain attractive even to retailers. But just in terms of retail itself, I think it's interesting. I mean, taking a big step back here, I've heard some people in the retail sector say something that stuck with me, and the saying was the war is over and Amazon won. Now, all due respect, Zalando and DHL, I think they made it only in a directional way. It's not over, but the point is, what we were talking about 3 years ago with retail has largely happened, and everyone's looking at Amazon, and it feels that way. But what strikes me with this is I think there's a very real chance we haven't even started yet. I mean, when you look at what is going on now in retail, never mind that Amazon themselves just made a huge investment and additional robotics. But you now have Google, for example, who in January of this year filed for a patent for an optically enabled robot capable of consolidating pallets inside warehouses. So a completely different way to think about the problem than what Amazon is doing with their Kiva system. And it's not just that. And also in the US, you have FedEx and Microsoft launching a fairly large partnership. Facebook is talking about getting into fulfillment. DHL, I'm sure, can operate at those levels. So these are, and you've got Walmart and Alibaba as well. So the size of competitors that are focused on this fulfillment space, we may have just started with Amazon, right? What we see in the next 3 years may change stuff even more. And one statistic that caught my eye as well, there's a small e-commerce company out of Canada called Shopify, which a lot of people haven't even heard about yet. And what they do basically is they produce online web and commerce tools for small independent merchants. Perfectly good little business, perfectly successful. It's very hot right now. But what blew me away with this is the fact that the last time I checked the market capitalization of Shopify, it was about $100 billion US. And I had to do a double take, because here I was thinking that we were somehow the hot sector here, because 100 billion US is roughly the combined market capitalization of Prologis, GLP, and Segro thrown in a good measure. So, the size and scale of competitors coming into this space may really change the way things look in 3 to 5 years. And on one hand, that's good, because that's where our pricing power comes from. That's where the demand inelasticity comes from. But I think it also means that we need to recognize, and a little bit humble as we go forward, because there's things moving out there that we can't necessarily control from our little standpoint in real estate.
That's interesting. I'm just going to share the results of that poll. Do you expect to move towards onshoring in terms of supply chains post COVID-19? Yes, a significant increase, 31%. Yes, a small increase, 64%. And no, there'll be no increase at 5%. So interesting results there, I think. Ben, Logan mentioned DHL there, so let's pick up on that, and also let's pick up on this supply chains part of it. Are you expecting to? Are you expecting to see an increase from your point of view in terms of the real estate that you're looking at? And I suppose what sort of real estate are you looking at? What are the locations? Where are you looking?
Well, perhaps sort of focusing on supply chains first of all. I thought it was interesting at the start of the crisis, the sort of COVID crisis. I was reading in the papers about car manufacturers effectively saying, they had about 3 months worth of supply of parts to be able to continue manufacturing their cars. Otherwise, they won't be able to sell their cars. Now, sort of fast forward 3 months into the crisis, the fact they don't have the parts for these cars is not the problem. It's about selling the stock they've already got and being able to sort of, produce revenue through that. So I think I agree with the poll in that we will see a small amount of more onshoring, but globalization in the supply chain and the sort of movement of goods through that global supply chain will continue to prevail, and I don't think that's going to be the solution to the amount of supply that may or may not come back into the market in the logistics and warehouse space because of business failures or whatever else it might be. To answer your question about what kind of space we're focused on, there's lots of very exciting new ways that retailers are coming up with, being able to get the goods to the consumer, click and collect, dark stores, sharing space in different types of locations or pop-ups as well, which I think were mentioned. But, the distribution center, really, that is the backbone of the bricks and mortar e-commerce facility. For us, these are not 100% necessary to be located in the center of urban areas. you know, what I was talking about earlier in terms of congestion, the cost of, you know, all of the different type of traffic initiatives, as well as the cost of labor in these urban centers often means that the rents, as well as the high prices of the real estate itself, has to, you know, push upwards, meaning it's more difficult for groups such as DHL or anybody really to operate efficiently. And when you're, you know, competing with a group like Amazon, who's able to drive down the price of their retail offering so much, it becomes even more essential to get that right. So, you know, whilst we're not focused 100% in the center of these urban locations, you know, we're quite often on the peripheries of the core urban area. And, you know, from there we can handle not only the e-commerce solutions, but the other sort of 3PL type of you know, customer requirements that we have. That certainly, as the industry changes more, as e-commerce increases further, I think, you know, the ever-changing products that the consumer or businesses require, that will ultimately change more the shape of these facilities. You know, as we require more automation, more technology, you know, we will start seeing more interesting or unique situations that developers and investors will also be a big part of growing and aligning with the 3PLs such as DHL.
Okay, good. Raimund, I just wanted to come to you, but just in terms of the plans for Zalando, looking at real estate, I mean, are you expecting to grow? And if so, what sort of properties is that? Are you looking for XL warehouses? What are you looking for in terms of your real estate? And has that strategy altered really post-COVID, or is it pretty much just continuing from what was happening before, really?
One thing is really, so first of all, we expect to grow. So we are really on a good growth path and even probably accelerating our growth. And that also means additional need for warehousing. Maybe also back to the point before, and Jean-Luc maybe remembers this as well. So we had already this time, and Logan mentioned it, you know, after the 2007 crisis in 2010 and 2011, when it started that there were no buildings available anymore. At the time at Amazon, we also had the problem, where can we get space? And we looked at a lot of old retail spaces, and it was really difficult to accommodate e-commerce in a standard egg box, as we called it. And the same discussion was also interesting that we had even on a board level in the US. We had some discussions, you know, e-commerce growing at this time from 5% to 10%, assuming that there must be some losers, so to say, you know, some vacant retail spaces, but we have not seen it. So nobody has actually given up some retail space. So I do not see a big trend that suddenly, you know, millions of square meters of old retail space distribution centers will become available. But for us, we grow, we continue. We're just building one building in France in the moment, so one in the Netherlands, but that's about to be completed in France. And it's a pretty similar building like the Amazon building, is a fulfillment center, usually with mezzanines, with big towers inside, also with a lot of automation. So it's really the big XXL 120,000 square meter, the 1.2 million square foot buildings. That's the kind of buildings we're looking for. We have a higher dependency on being closer to the markets because of the labor demand we have. So it's still 2,500 people we need. We do not have this terrible peak that we need to double for the Christmas period, but constantly 2,500 people, and that's not so easy to find. So we cannot go in the middle of nowhere.
No, that's interesting. I mean, I also did an interview earlier this week as well, looking at that onshoring side, and particularly that employee cost part of it and employee availability. But that people will be generally looking at, I suppose, wider things than purely that cost base in terms of employees. This is one coming in from Rich Moore, which is, thank you, Rich, for this. Is the mood changing, and will the public need to take on part of the cost of deliveries? Is it generally accepted it's now too much to ask for same-day delivery and free returns? How will firms make profit with growing rents, taking on more buildings? So that's an interesting one, because that was a topic that was also very much a discussion for the last sort of 2 to 3 years, is that sort of profitability level. I suppose, what's anybody's sense on that? Do you think the public will now value e-commerce, same-day delivery, quick delivery, and be prepared to pay for it? Or do you think it's been free and people will then stop doing it if it's not free?
It was quite an experience for the customers to get it, and maybe there's a higher acceptance, so to say, in the future, but that shouldn't be the driver. That they say now, they realized how important it is now. You have to pay for it. I guess the change will come more out of the sustainability. So it's still a big topic. Some people say we will not talk about it anymore because after COVID. I do not hope so. I really hope that we prepare the future, in the right way, sustainable way, because otherwise we will be hit by a different crisis in 4 or 5 years, the climate crisis. So I hope this is going to happen, I think, and that's the main pressure on the fulfillment networks, that there's maybe some costs in particular for the returns. And we have already in some legislations like Germany, they're talking about forcing companies to ask for money for the deliveries and for the returns.
That's interesting, and there's a couple of questions coming in here. One also from Craig Wright. Thank you, Craig, for that. But which picks up what's the logistics sector's view in ESG, but also is the potential environmental regulation or taxation of e-commerce a big risk to the growth assumptions in the market? How will the industry mitigate the social and environmental impact of higher e-commerce parcel delivery volumes? I mean, that's an interesting one. I mean, Ben, how do you see that from DHL's point of view, looking at that, I suppose, ESG, environmental side?
Oh, it's hugely important. We've got a commitment as a group to be completely carbon neutral by 2050. It sounds like a long way off, but we run probably the largest fleet of vehicles, both road, air, etc., out of anybody, and that's a huge consideration. We're making great moves in that way, but I think there's more to do globally. I think as well, the consideration as to the increased cost impact of this type of carbon offsetting, either from a local government or council consideration. It's something that groups such as DHL and our customers are going to have to start pricing, and we'll have to sort of make ways to try and create efficiencies elsewhere in the business. DHL has also committed 2 billion euros over the next 2 years to our digitization across the business, which will also start to sort of accelerate, some of those ESG initiatives to help us become a greener and leaner, more efficient group. But costs are very real, and they're increasing in every part of the supply chain, everywhere. But it'll be interesting to see how technology changes and helps us face that reality and try and cope with that cost.
Will there be an impact on design, and particularly things like from Alex here, which is, why is multi-story logistics so rare in the UK and Europe? And also, what's your sense of mixed use, including logistics? Obviously, we were talking about beds and sheds for the last couple of years. While interesting for investors, is it something that occupiers and planners will want?
I think firstly, to the question of multi-story in Europe, even prior to COVID, we had started to see some real examples of multi-story in Europe. And I could point to a couple right off the bat. You've got Vilog, you've got Gazely GLP, Amazon, of course, DSV is doing it themselves, AEW is funding it. So there's already 5 to 6 multi-story projects happening, not just in London, but elsewhere in Europe too. And I think it goes to a lot of what last mile is going to be. We've talked about it with ESG. We've talked about it in terms of okay, we all know that there's going to be more last mile. What is it going to look like? And part of it's going to be multi-story, not exclusively. But I think that one thing that is changed now compared to before versus after COVID is that for the first time, warehouses are seen really as essential infrastructure as part of a city. And I think that because of that, it's going to lead to a lot more involvement, not just on the environmental side of ESG, but the social side of ESG. Because I think that it's going to really cause a lot of urban planners, a lot of city councils to take a much closer look and think about, okay, hey, what are you doing with this warehouse here? How are the people going to be impacted? Are they safely distanced when they're inside working through the warehouse, et cetera? And this is not something that we as a sector are generally used to. So I really do think that coming out of this, the investors, the developers, the occupiers that are going to be favored are going to be the ones that understand not just the logistics, the supply chain, the price point of delivery, but the ones that really understand how people move through cities, how people operate within facilities, how facilities can be repurposed, right? Beds and sheds we've been talking about for 3 years ago. Well, now you have people who are talking about it who are actually on the city council, right? And you could have that argument for any, parking lots, for example. There's already examples of parking lots being repurposed in Europe, and there's no reason you shouldn't see this in other asset classes as well. And further, I think that it's almost inevitable.
I try to make this very short, but I think multi-story will come just because of the scarcity of the land. So there is no other alternative. So we will see it more and more, and it's coming already more and more. There are much more buildings as mentioned. Secondly, beds and sheds. I think it's always a great program. The reason why it does not work for the moment is that we have on one side big logistics providers, developers like Prologis, Gaisley, Goodman, Panattoni, everyone there. And they are specialists in big boxes, and they make a lot of money with one big box to turn it around. On the other side, we have the residential office and retail developers. They do not have enough experience, so we need a transfer between the two. So I think that's probably the biggest problem, that the local urban developers don't understand logistics, and the logistic guys unfortunately do not really understand the urban development. And it's also a lot of effort. For an urban project, you need 5 years in, and maybe you sell the whole thing for 30 or 40 million euros. So it's much better for the big box providers to do the big boxes. So, okay.
Yeah, I completely agree with Raimund, and also picking up on some of the points that Ben and Logan mentioned. I think it's really what's happening in the urban locations, because fair enough, you might not need storage space in the city center, but you do need storage space to be close to your consumer on the edges of the city. And when you look at the vacancy in this sort of the industrial area, probably more likely than the logistics area, what really is the vacancy? The company that's cutting and packaging the fruit still needs that same space. So the vacancy is not going to go up, it's only going to go down. And so if you don't have anywhere to go, where do you go? And so you have to look at other parts, retail warehousing, car parks that Logan mentioned. But the reality is we will be looking at retail space, because if you're looking at retail schemes where occupancy rate is going low, 50% or lower, what is their opportunity to replace what is the replacement opportunity in those areas? And it's very, very limited. So you need to look at different uses. And I think retail, how we use retail space for storage and how we can implement that is going to be quite interesting in the near future.
Okay, good. I just wanted to pick up on a couple of things, and maybe just start with you, and then I'll come to Jean-Luc, Anita. But these are around rent levels. So do you expect rental growth in 2020, given the potential dip in demand? Now, that's from Kerry. Thanks very much, Kerry Shaw, for that. And from Tristram Frost, what percentage of logistics property rents, excluding UK, were collected in March across Europe? And what is the expectation for June? And if you haven't got that to your fingertips, we will come back and answer those as well via text. But if anybody's got answers to those, let me know.
Yeah, I think on the rental, I can pick up the rental growth. I think for logistics, clearly last few years, we have seen really significant on a headline rent basis, and that's because net effective rents are, they're so high, there are hardly any incentives in many of the markets, particularly land constrained markets. But I think in logistics, we're quite open that for this year, we're probably plateauing, and I think it's probably, stable rents. But what we really need to look at is industrial, particularly city locations industrial, because the demand for that, particularly e-commerce and any kind of, to the consumers, like food, for example, and so forth, that we see coming out of COVID, that's the demand has to go somewhere. and the space is just not there, because as we know, the priority of municipality is not industrial today, it's residential. And so, you know, even if you have an existing old space that's used for industrial, the likelihood is probably will be rezoned for something else. So you sort of, the supply is a real issue. And I think in those areas, city areas, industrial, yes, there will be rental growth. The question is how much, and I don't think we should be shy about forecasting it quite high. I think at the same time, we need to be realistic that retail will drop quite a lot. And I think that's in a process of, so I think sooner or later we'll be able to meet on the rents. Okay,
good. Jean-Luc, what's your sense of that in terms of rents?
We think that so it will very much depend, of course, country by country. Some countries have been hit harder than others in terms of COVID-19. But in general, the trend would be prime location would be growing, I think, in terms of rent, and secondary location may be suffering, let's say, a little bit more, I would say.
Just in terms of the sector, one, has your family's online e-commerce changed? I.e., so have you been influenced by it? And also, I suppose, what's your key outlook in terms of locations, in terms of where either as an operator you want to be, or as an investor you're looking to grow your portfolio? So let's start with you, Raimund.
I think for us and the family, probably the online habits have not changed, because, you know, being since 20 years digital native, ordering everything, it cannot much increase anymore. So there is already a lot of online business. But I think around me, definitely in the grocery sector, ordering from Amazon the food, I think this has definitely increased, and a lot of people did it. In parts of location, it's now a difficult question. I was just asking myself, should I put a trend telling you some locations which are not good to get the best locations? So, you know, but however, it remains, as I always used to say, also in old times, if you see Europe by night and you see the satellite picture, then it's normally where the light is, you have to go. So, because that's the dense areas, and that's also the areas where there's a lot of purchasing power. Mm-hmm.
Okay, good. Logan.
In terms of geographies, Richard, we could talk about last mile, but we've talked that one through, I think. I cannot think of a country where there is not opportunity in this sector. The question is really how. I think for sure, major large cities. Personally, I also think some secondary markets, because there's going to be increased e-commerce from there, and I think people have been focused mainly on the larger ones. I think it's more in terms of where in the city, and how it's approached, and how well integrated is a particular development or an investment into a particular community, and is it really last mile, or do you just want to call it last mile? Because I think that's also something that we've learned over the past couple of months, and that we've learned what is last mile and what isn't, and we've learned what is essential to transportation and fulfillment infrastructure and what's not really. So I think just taking a longer term view, working closer with the city, there's going to be opportunity everywhere.
Okay, good. Ben.
We have increased as a family our use of e-tailers during this crisis, as witnessed by the huge pile of boxes I currently have outside of my house. But no, I think, look, as an operator and a group who occupies probably the most logistics space globally, our strategy for location hasn't changed, and I agree with the sort of outlook from looking down at space on the cities with the lights on. But we also have demand for certain parts of our businesses that will be sort of further away from the town and cities that look for more efficiency from a cost perspective and pricing point. But I think there is so much growth and change that we will see in the next few years, accelerating because of technology and automation and AI, that the industry is going to see so much change.
Okay, good. Anita.
In the crisis, I did my first food online shop ever, so success. But yeah, no, embracing buying things that I never would have thought I would buy online, and so that's really going really well. And I think that I think in my opinion, both I think if logistics made, an asset mainstream, I think industrial is something where we, in the short to medium term is really, I really see a lot of potential. And I think actually just very quickly coming back on the question on the yields for Germany and Netherlands, because we don't have a forecast, but I was just looking at my slide and then I was just thinking, if you are able to buy an office building in Germany or Netherlands at 3%, then you also can buy logistics for 3% if you can get the same debt terms. So the reason why you're not there is not because of your ability, but of your choice. And so then the question is, are we going to choose to trade? How much of a discount is logistics going to be to office? So I think that's the potential. It's hard to say forecast, but the potential's there.
Okay, good. Jean-Luc.
So in terms of family habits, we were big consumers of e-commerce, so no big change for us. I agree with Raimund. And in terms of countries, I would say Germany is basically where we are putting a lot of efforts, and where maybe we have the best opportunities is Italy, because I'm managing Italy, so I need to say this.
Okay, good. I'm just going to share some results here of a poll that I sneakily did whilst not telling you, speakers, which was which European locations are likely to provide the best opportunities post-crisis. So we've got Germany out ahead at 50%. Then we've got CE at 36%, France at 30%, UK at 25%, Italy 20%, Iberia 19%, Nordic 16%, and SEE at 9%. So Germany seeming, at least from the views of everybody here, to be a sort of larger opportunity. Thank you to everybody on the panel for sharing your views. Thank you to everybody who joined us for all of your questions, and very much look forward to seeing you at the next one. So thanks very much. Stay safe, stay well, and look forward to seeing you again on Zoom shortly. Thank you.